Eleganz Interiors revenue surges 40% to 74.26 crore in Q1 as order book hits 621 crore. Synopsis, a provisional Q1 FY27 update from an SME-listed interior fit-out contractor shows revenue up sharply and an order book running well ahead of last year's sales, but the same period's annual accounts show debtor days more than tripling and cash flow turning negative, a combination retail investors should weigh before reading the growth number in isolation. Shares of an interior fit-out contractor serving corporate offices, labs, and airport lounges came into focus after the company shared a voluntary Q1 FY27 business update, reporting a sharp jump in quarterly revenue and an order book running well above annual sales. The update is explicitly provisional and unaudited, covering only revenue and order book metrics at this stage. The shares of Eleganz Interiors were last traded around Rs 96.90 apiece, with a market capitalization of roughly Rs 218.88 crore. The stock trades at a PE of about 9.08, well below typical small cap multiples, and is down close to 24% over the past year despite reporting consistent profit. Q1 FY27 business update. Provisional revenue for the quarter came in at Rs 74.26 crore, up 40.4% from Rs 52.90 crore in Q1 FY26. The order book stood at Rs 621.46 crore as of June 30, 2026, equivalent to about 1.6 times FY26 revenue of Rs 400 crore. And the company added Rs 148.96 crore of fresh orders during the quarter, roughly twice the revenue it booked in the same period, a healthy book-to-bill ratio that points to continued demand from its Grade A and Fortune 500 client base. The 40% jump looks strong until you check what it's being measured against. FY26 as a whole was a lumpy year for this company. First half revenue came in at just Rs 111 crore with net profit of only Rs 2 crore, before a sharp second half recovery to Rs 289 crore in revenue and Rs 20 crore in profit. That pattern is typical of project-based interior contracting, where revenue is recognized on execution milestones rather than evenly through the year. But it also means Q1 FY26's Rs 52.90 crore was itself a soft, low base. A 40% year-on-year jump off a weak quarter is encouraging, but it isn't yet evidence that the full year will re-accelerate meaningfully faster than FY26's trailing 12-month sales growth of just 2%. The more important number in this story sits in the annual accounts rather than the press release. Debtor days jumped from 40 in FY25 to 138 in FY26, a threefold increase. For a services contractor, that means cash owed by clients is taking far longer to come in, and it shows up directly in the cash flow statement. Operating cash flow turned negative at Rs 13 crore in FY26, and free cash flow was Rs 25 crore. A reversal from a small positive the year before. The company funded this gap partly through borrowings, which rose from Rs 6 crore to Rs 42 crore over the year, and partly through a promoter-subscribed warrant issue, 8 lock convertible warrants allotted to the chairman and managing director at Rs 83 each in June 2026, raising promoter holding to roughly 70.3% from 69%. Promoters putting fresh capital in is a reasonable signal of conviction, but it also confirms the business needed external funding to bridge its working capital gap even as the order book kept growing. Disclaimer: this article provides stock market news for informational purposes only and should not be construed as investment advice. Readers are encouraged to consult with a qualified financial advisor before making any investment decisions. Eleganz Interiors.png